Everyone, this is Rob Roy of Elliott Wave Options, and welcome to TradeFinder Live. This is your first time joining us at TradeFinder. Welcome. Give you a quick rundown on how things work, but before we go any further, I have to go through this wonderful disclosure/disclaimer. It is a requirement, so please take it seriously. Read it in detail at your leisure if you by chance haven't seen it before. A couple of things that the powers that be want us to make you aware of is, number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. For those of you that have been with us before, you know the background out of the Dragon capsule and back up in the mountains. But we keep moving forward with all of our presentations, no matter where we are in the world. So, count on us to be there. With that said, for those of you that are new, and welcome to all those of you that might be live streaming on YouTube or the various social media platforms. Special welcome to you. We're just branching out. Last week was the first week that we went through more than just YouTube Live. But the way we work, TradeFinders will do a quick market update. We had a few other markets that have been asked to cover. We'll go through any open or closed alerts that we did for our alert subscribers at Elliott Wave Options this week. Gives you an idea of how the alert service works. This one kind of ties in with a case study consideration, which is the next step, where we go through and look at our previous case study considerations. We try to identify one each and every week. We'll do that tonight as well. And then at that point in time, you're kind of on your own to manage it, but we'll share with you the way we managed one of the ones that we found from last week, move very quickly. So kind of getting a double whammy there. And then whatever time's left at the end, we'll open it up to general Q&A, and that usually amounts to you guys giving us some of your favorite symbols, and we take a look at what our technical indicators show as far as those stock symbols that you like. And that's it. That's how TradeFinder works. So without further ado, let's go ahead and get into taking a look at the market itself. And as you can see from the SPY, pretty good doji there today.
Hi, Rob. It appears your screen is frozen.
Okay. Let's try this. How's that? We see an integrated investor now?
Yep, good to go now.
Okay. All right. So taking a look at the SPY at this point in time, we have a doji with a pretty vertical move to the upside. Now, if you watch the last SPY update that we talked about over the weekend, a little bit suspicious of this vertical move. And if you've listened to me and do any of these webinars, you know that I don't like it when things go vertical, because what goes straight up quite often comes straight back down. And I'm also not a fan of all of these gaps that are located in the chart, because gaps get filled. And we actually had someone, real math-oriented person, that went back and did a study after hearing me talk about gaps get filled, and their data showed 94% of gaps get filled. So we know nothing's 100%, nothing works all the time, but man, 94% of the time of getting gaps get filled, that's a lot. So pay attention to it when there's a gap in the chart. And it's unusual to have this many of them on the SPY. It just doesn't usually happen like that. And so, that's a pretty good ways down. We had a potential for a flat forming at the top there of that zigzag, but now it looks like the zigzag is extending. So we'll take a look there, and right at the 161.8% level. And we talked about a while back a large zigzag that had an extension. Remember, at one time there was 5 zigzags, including the wave 5 pattern within the wave 5. Just never seen that before, but that's how long this wave 5 has been moving along. And we had an extension target at 460. A few people on YouTube have mentioned that, say, hey, we're awfully close to that level that you talked about a while back at 460 on the zigzag extension, and we are awfully close to that. In fact, the high of the day today, 458.49, so that's a point and a half away. And then a doji right at the 161.8% extension. You know, if the market does want to take a pause, now's a pretty good spot to do that, especially with the vertical move and all the gaps. But so far, nothing has seemed to want to slow the market down. What we could do is say, all right, well, if we continue, where do we go from here? Well, the next step you would go is to a 261.8% level. So let's go ahead and add that into the mix and see where that might take us. 281. And it's as simple as that to go ahead and adjust one of these. So 474 would be the next zigzag extension of this current zigzag. And if we pass this level, we pass 460, then we'll have to go back and do a whole new analysis to see where's the next likely move. And on the weekly chart, prior 460 was also a target on the weekly chart with the market. So awful lot of resistance with where we are right now. But I've been saying since we started this move, 2 weeks ago, that little was uncomfortable about the nature of this move, and the vertical move and all the gaps have just added to that. At some point in time, the Federal Reserve is going to start their tapering. They say they're going to start doing it in November. And again, that doesn't mean that they're not adding liquidity, but they're adding less liquidity. So it does kind of slow things down a little bit as far as how much money is moving into the markets, but it's not the same as withdrawing liquidity. It does have a similar effect on interest rates. However, let's take a look at rates. Let's take a look at the TNX, because when the Federal Reserve is injecting liquidity, they're buying bonds and treasuries. And so that prices go up, yields and rates go down. You probably know that's how bonds work. So who's going to take the mantle from them when they start buying less? Or are rates just going to start going back up and go up significantly? That would be a headwind for the market, obviously. So it just depends on when they start this and whether buying is going to come in from other places around the world. We are one of the few places that has a positive yield. That could be attractive as rates start going up. You could make an argument of, well, as rates go up, that becomes even more attractive to other places that are in negative rates. And maybe that attracts more money to soak up the difference as the Federal Reserve tapers off. A lot of unknowns moving forward, but that's what happens when you get to elevated targets like we are now. Every single zigzag in that wave 5, all of them, every one of them has gone to the 161.8% level. And now this last one is at 161.8, and the weekly chart is going to 460. We'll probably pull the weekly chart up again in the next XPY update and review that to remind everybody. At some point, we will have a correction. Who knows when that'll be? But so far, they've just been little blips. Now, looking at rates, we have had a little bit of a move back to the downside, but kind of staying with that zigzag theme to the upside on rates as well. You can see clearly there's an A impulse and our B correction. And when you have a B correction at 38.2, which is almost exactly where it was, your target price is a 61.8% extension. From that point, from the 61.8% extension, you move up to 100%. Often you will test the previous level, which means we could drop down to 38.2. We'll just have to wait and see if that's how things play out. But for now, taking a look at interest rates, maybe a little bit of a pause here, but we could just bounce off this 61.8 as well. We don't have to go down to 38.2. That's what happens often, but it's not a rule per se of extensions within Fibonacci levels. So a couple more markets we'll look at, and then we'll move on. Let's take a look at the diamonds. People have asked about looking at the Dow, and so I admit that I tend not to look at the Dow so much anymore. More of an S&P person. I just feel like it's a broader look at the market. 30 companies versus 500. I think you just get a better view of the market itself. But you can see that pattern's pretty similar. Gap up, move to the upside, new all-time highs, just like we have in the SPY. No doji on the Dow, however, like we do on the SPY, but moving up to new all-time highs. And let's take a look at what the DMI is showing us here on the diamonds, and trying to curl back up. Now, I like it better when the ADX makes it below 20 and moves up. If you've watched these before, you know that with the DMI. And we have an indicator mastery class that we did on all of these indicators. If you're interested in learning more about them, you can go to our website at ewotrader.com, where we take a deep dive literally into each of the technical indicators that we use to support Elliott Wave. Elliott Wave is our primary indicator, but you don't ever want to rely on any one indicator, no matter how good it may be. And I think Elliott Wave is the best single indicator. But if you build a system around it that's filled with great supporting indicators, that just makes your system that much better. So a pretty similar chart with the Dow now. It hasn't always looked exactly similar like that, but it does at this point in time. Let's take a look at the IWM. I know you guys are always asking about the IWM, and if I don't bring it up, then you ask about it anyway. So look where we are. Is this exciting, or is it going to be just another head fake? And what I'm talking about is, if you're newer or haven't seen this before, we've been talking about the IWM literally for the entire year has been in this trading range between 210 and 230. Support at 210, resistance at 230, and now here we are back up there. Now, if we could break through 230 and the small caps become interesting again, as I've said, they've done nothing for the entire year, just stayed in a trading range, gone nowhere. But if the small caps break out and money starts moving in there, that would certainly be a positive for the market to continue to the upside. I haven't had leadership in small cap, and small cap stocks are a risk on type of environment. When money is moving in to those sectors, normally it means the market's likely to go higher. So here we are, 230 again. Can we break through it this time? We are in a wave 3. Look at the DMI trying to set up. Now, when you look at that, just as a quick refresher here, the ADX is moving up. It's moved above the negative directional indicator. It's heading towards 20, but it's not there yet. Good separation between the two directional indicators. And I just remind people that even though it looks that good, it looks like it's definitely going to cross the 20 level, it has to actually do it. So that ADX is moving up. It looks like it's going to be like, oh, another day or two, it'll break above 20. Maybe, but there's plenty of times where it goes up and looks like it's going to break it, and it rolls over and comes back down. So right now we just have to wait and see. But if we break 230 and there's support from the DMI, you just have to, no matter what you think should be happening in the markets, you have to take a look at potentially a decent continuation to this leg higher, not just a little bit, but the small caps start leading. We could have a pretty nice rally, and we're moving into what's typically a bullish time of the year anyway. So we're gonna keep a close eye on this. By next week, we'll know, right? The next time we get together, we'll know, did we finally break this level and hold it? We have to break it with a follow through or confirmation day. If you're new with us, that's important. That's one of the rules that we talk to our subscribers about all the time. So looking at the triple Qs, let's see what they're doing, and haven't quite made that new high yet. So is the leadership leaving the Qs and going to the IWM? Obviously, higher rates have hurt tech stocks. They get affected the most. If there's a little bit of a pause in rates here, then perhaps we could break to the new high here on the Qs. But it's a really good 5-wave impulse pattern. You can see the wave 4 right there, 43%. Right at resistance of the previous wave 3. We've got our wave 5 projected target. And if you're not used to seeing the software or curious, it's called Profit Source. It's created by the Hub organization. You can learn more about it at hubb.com. If you're interested, it does way more than Elliott Wave, but in my opinion, it's the best Elliott Wave software that exists out there. And I've tried all the ones that I'm aware of that exist, but you can create your own systems. It's got every indicator you can think of, all kinds of things that you can take a look at and create your own searches from. And we'll be showing you a little bit more of this as we go. But people always ask about it. The charts are really clean, easy to see, patterns jump off the page at you, etc. But the Qs look pretty interesting if they can break that new wave 3 high. Now, so we have the Qs at resistance, we have the IWM at resistance, and we have the SPY at resistance. So something is getting ready to happen. Either all these markets are going to break through the resistance and we're going to go on one heck of a run to the upside, or everything is going to fall back and we're going to have a little bit of a correction here. So again, we're not going to have to wait very long now. Everything is there. So it's a really interesting time, isn't it, to be a trader, to see what happens from here. This is the kind of stuff that I really like. Been trading for 25 years. Many of you know that. Been trading Elliott Wave since 2001. But when things like this set up, that's the exciting stuff. Is okay, now what's going to happen now? We have our patterns. We can see what's being forecast. Where's the follow through? Does it actually happen? And so be really interesting to see where we go from this point. All right, so I'm sure you want to look at Bitcoin as well. And man, Elliott Wave has just nailed Bitcoin, and it did it again. So now you can see that the Bitcoin chart is relabeled. We're in a wave 3, that we have the wave 4 moving back down here. So it's retracing back to the downside here. And you take a look at the DMI, the ADX is really high and hovering right up in that area. But there's a key. When we talk about the DMI, if you go kind of vertically and you break above 40, then that tells you the strongest part of the move is over. Doesn't mean the entire move's over, but the strongest part is. But there is a scenario where the ADX just hovers in a higher area and maintains that and just continues to show strength without it getting too strong. And that's the key. You don't get too overbought, because when things get too overbought, then that's when you get a correction. Now, we all know that a lot of this move had to do with the new futures-based Bitcoin ETF and the buying that had to occur to fulfill that, et cetera. But it's holding the gains. It's holding the gains rather nicely. Just if you're wondering, again, if you're new, this 4 does not mean we're in a wave 4. It means if the wave 4 started now, that would be an area to watch for support. And then here's the eventual wave 5 target at that point in time. So these are price projections. And this wave 5 box over here is called the tap box for time and price projection. So that's where you would think things are likely to go. So it's giving an eventual target on Bitcoin up around 76,000 or so. Now, do we correct first before we go there? That's the difficult part when you're in a wave 3. But I like to look at zigzag patterns within wave 3s, because I think that makes it much easier to figure out where things are likely to go. And you can see that we hit the 100% extension dead on. If you haven't seen this in the SPY update. And so then the next levels, this looks very similar in a chart to looking at the interest rates, right? So do we move back before we move higher, or do we just sit right here? And that's the end of the move. Either one is fine, because it has done its job. The zigzag has been completed, but at this point in time, you look for potential extended levels, which is what the SPY did. All of the levels extended in the SPY. Does that happen in the DMI for Bitcoin? Well, we'll have to wait and see how that plays out. But really interesting the way Elliott Wave has been so on top of Bitcoin, just level after level hit. I mean, not close, just absolutely spot on. It's been really amazing. And so that kind of covers the Nifty. And someone asked if I could look at a little bit longer chart. So we'll go ahead and bring up a weekly chart of that as well. And we've talked about this level here, and it held again 49. As long as the Nifty stays above 49, you have to stay long that market. So the India market, and we came down, we tested it once again, and you can see the bounce back off of that support level. So it looked a little dicey there for a moment, but really all that was playing out was classic Elliott Wave patterns. Once again, we have this triangle pattern here where we have a symmetrical triangle where we bounce back to the upside, and those triangles, once they break out, they get retraced. So corrective triangles get retraced, and so it retraced it and bounced back up, and that's where we are. Now, I did promise I would take a look at the weekly chart, so let's look at that and get an idea of any differences. And interestingly enough, the charts very similar, both in a wave 3. So there's your weekly chart, and the only difference would be the DMI is weakening a little bit on the positive directional indicator, but we've been going through some consolidation on the weekly chart, so that's warranted. The ADX hasn't rolled over yet, so that positive directional indicator could tick back to the upside if we get a strong follow through throughout the rest of the week. So that looks pretty good. You can see there's zigzag patterns all over the place here in this wave 3 as well. Boom, 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 right there. We can just go ahead and take a look at the real big one real quick, which is right there. And that would give a 100% extension at 51.88, which is pretty much 51.40 was high. So call that one basically hit. And now we wait to see if we're going to go up to the 161.8% extension. So that makes sense on why we're consolidating now on the weekly chart, but defer back to the daily for the rest of it from that point in time. So that's where we are in the different markets. And what I'll do now is go ahead and take a look at one of our alerts. And this was from the alerts that we sent out just last week. On the 19th, we sent out an alert on PAYX, and we actually did send this as an alert to our subscribers. So we identified it during TradeFinder last week, and we sent this one out. Not all of the ones that we identify as case study consideration during TradeFinder are sent out to our subscribers as alerts, but we've had a lot of questions regarding the alert service. Do you send out alerts for just entries? No, we send out alerts for entries, any adjustments, and exits. So at TradeFinder here, we find a case study consideration, then you're kind of on your own with what to do with it. But I thought this was an interesting one for a number of reasons as well. So here was the entry, and you can see that we moved to the upside, and there was our target price. And we had multiple Elliott Wave patterns. If you were around last week, you know that. And so the expectation was for it to move higher, and it did in a very short period of time. Now, it says 1 day, but it was 2 trading days, less than 48 hours, though, so it still labels it as 1 day. And look what happened. Boom. Yeah.
The screen is frozen again, I believe.
So I guess I'll have to do this every time I change it. Is that good?
Yeah, good to go.
Okay. All right. So I'll go back and show you this again. So by the way, this is what our trade screen looks like at Elliott Wave Options, ewotrader.com. Every one of the alerts that goes out has a page just like this, and they're all listed under the trades page here. And so it gives you this information, entries. So here's the entry that we sent out here. And there's the zigzag pattern to the upside. Again, if you were with us at TradeFinder last week, you're familiar with the patterns that's set up. And then here's what I was talking about. The exit was 2 trading days later, less than 48 hours. So 1 full day, because that's calendar the days there at 24-hour schedule. And we moved to the upside. Now, there's some interesting side points here. Now, we are at a fib level. We're at a 61.8% fib extension, but could we go higher? Well, if you look at the DMI down at the bottom, you can see, well, man, that ADX is getting up near 40. The positive directional indicator and the ADX are at the same area. It could wiggle around there, but we need to take into consideration that we're starting to get towards an area of being overbought. But here's the thing that really helped us decide, hey, it's time to go ahead and take that quick gain and get out, is there is a dividend on the horizon for paychecks less than a week away. And everyone, well, hopefully you know that when a stock pays a dividend, the price of the stock is reduced by the dividend paid, which obviously affects the options pricing as well. And so call options tend to go down, but you would think that the ex-dividend day, so the day the stock trades minus the dividend, so it trades at the new lower price minus the dividend, or at least opens there, and see what happens throughout the trading day, that the value of the call would be lower as well. But it doesn't work that way. In real life, the calls start pricing in the dividend a few days in advance of the ex-dividend date, and not a lot of people know that. And so you don't want to necessarily wait and get out the day before the ex-dividend date. Some of that premium has already come out. So there's a lot of little tricky things that go on with the pricing of options that not everybody's aware of. So I thought that might be an interesting tidbit for you in adding in why we chose to take the gain. So 42% in less than 20 or less than 48 hours, less than 2 trading days. I will take that every single time. And if you are interested in learning more about our service, there's no better time than right now. We do have this special going on right now. It's called our predictive trading, Elliott Wave Predictive Trading offer. You can see that only has 5 days left. It ends at the end of October. That's going to be it. And as I scroll down here, you can see that basically you get the impulse strategy, which is our directional Elliott Wave based strategy for $89 a month, includes all that stuff, real-time alerts, member website, live insider meetings, which is on Thursday night. So that's for all our alert subscribers, have that. And all of our premium education is included in there. And then we have some bonuses that we haven't done before, but we do have our alerts sent out through text message and email, or both if you prefer. We do live Q&A on those Thursday nights. There's our online classes, as I mentioned. And here's the stuff that the bonus bundle that we haven't done before. You get 3 of our mastery level classes. That's ultra deep dive, and the manuals that go with them. People have been really complimenting the manuals, and so you have a record of everything that's included. And so the first course is the Impulse Mastery. So it's on the Impulse pattern, then Zigzags, my favorite pattern of all. And then one on our favorite indicator, or my favorite confirming indicator, the DMI that you hear us talk about all the time. All that stuff is included in this. And the $89 a month, by the way, had this question come in today. How long does that last? Well, you're grandfathered in. So if you sign up before October 31st, then you're grandfathered in at that price forever. And we were offering a free t-shirt. And so I haven't told the people that I was going to continue to do this, but TradeFinder, you guys are here every week. Those of you that are new, live streaming with us, YouTube or whatever. We did a gift certificate where you could go to our merchandise page and get you a free t-shirt or a hat or both or whatever. And so if you sign up between now in the next 24 hours following TradeFinder tonight, I'll go ahead and extend that, so you'll get that gift certificate in addition to everything else that I just described to you. So throwing a curveball there. Guys are like, stop doing that stuff, but we do like you guys at the TradeFinder group, and how dedicated you guys are week in and week out. So anyway, I wanted to share that with you. The offer ends very soon. Take advantage of it in the next 24 hours and get yourself a hat or a t-shirt to go along with it. All right, so now let's go back and let's take a quick review. And I'm getting better at remembering to do this now on sharing the screen. See, it's all this live streaming to all the different places on the planet that I'm getting used to. Technology is not my forte, I can tell you that. But anyway, thanks for your patience with us. But here, there's only a few over all the weeks and months that we've been doing TradeFinder. There's only a couple that would still be considered, in my opinion, to be open positions that you might not have closed out at this point in time. So those are the ones we review before we look at a case study consideration for tonight. And back in August, we looked at Align Technology, and then you can see what happened here. It had a move to the downside, but at a wave 4 area that is supportive. So an adjustment can be done here. You can just take the loss, or an adjustment can be done. By the way, we've only had, I think, 3 losing trades through TradeFinder that I can remember. The overwhelming majority of them have all worked out really well if you had some sort of prudence to your exit strategy. But you can see here we're basing right at a fib level that could hold, and we could go up to a new wave 5. Now it's got an earnings report coming up, and that's what happened is a short seller came out and said, it almost doesn't seem like they ought to be able to do this, does it? But it happens and it's allowed. But a short seller came out and said, hey, they're in the same sector as Smile Direct. Smile Direct had a disappointing earnings report, so we can expect a disappointing earnings report from Align Technology as well. Maybe, but it just, when you're a short seller and you come out with news that's likely going to move the stock to the downside, just feels funny, doesn't it? But it happens. So we'll see if the earnings report moves the stock higher or lower. Maybe the drop is enough of what would have happened, and it's kind of a buy the rumor, sell the news, and it goes back up following earnings. But regardless, if the stock does break this level, well, then you have, and that's one of the beauties of Elliott Wave. If one pattern fails, the next pattern is instantly clear, and then that next pattern has a higher percentage chance of occurring than the original one did. So I don't know many indicators that can say that. And so what we mean here is that, let's say that the earnings report comes out and we break that 4, and so that disqualifies the impulse pattern to the upside. Well, that means we're going to retrace all of this impulse move, and here's your new target way down here. So it could become a good bearish trade to the downside if that 4 gets taken out, or if it holds and moves back to the upside, then the original trade is still in place. And then on the 31st, this one is getting awfully close here. Finally getting to the point where it's slightly profitable on CWH. You can see the nice triangle pattern here, and there you go. This would be something from our volatility strategy, which we did send this out as an alert to our subscribers, as we did with PAYX, Paychecks. And so you can see, boom, we're down here at support. I've been lamenting, and we don't care which way it breaks when we have a strangle, right? It doesn't matter. It can break to the upside or the downside as long as it moves. That's all we needed to do is move. And I've been a bit surprised that with interest rates going up, with fuel costs going up, that it hasn't more adversely affected the stock. Because you got to finance these things. It's going to cost you more as rates go up, and you got to put fuel in them, and that's going up like crazy. I know you've been to the gas pump and probably been complaining as I have. And so it just doesn't seem like those are good things for the base fundamental case of Camping World. But that's why we don't trade fundamentals. We use fundamentals as support, but we don't trade based off of them. But we're at technical support, so different kind of support, and if we break that level, then we could have some significant move to the downside. So the key will be, does that hold? Then there's a whole different set of things. Well, if it holds and starts to bounce, do you take the puts off and hold the calls, or do you take the whole position off? All those are the type of the things that we do in our alert services to send out the specifics, so you don't have to be left guessing. Looking on BOTZ bots, another one moved down, created the wave 4, nice bounce back to the upside. So just letting that pattern play itself out. Again, with the wave 3, at some point in time, it's going to create the wave 4. And you can see that we had a triangle here at the top of the wave 3. And so that made sense. And with that triangle there at the top of the 3, it decided it was time to go ahead and create the wave 4. And so we're just waiting on that one. Now this next one, CPLG, getting pretty close to, you ought to consider taking this one off if you haven't already. And you can see that it's made a pretty nice climb, slow be it, but a pretty nice climb, like about a 10% move. We're just shy of that, pretty close, but just shy of it. But time starts to become a factor as well. So perhaps start looking at taking the gains in that one and moving on. Here's a really interesting one that we've been talking about, info. So this one was originally set up as a potentially bearish trade because we had that big move to the downside there. But then we came back and created this triangle right at resistance, right at where resistance was. And look what happened in today's trade. So you had a breakout of the triangle. That's why we look at triangles. So the question becomes, is there follow through? If it looks like you're going to get follow through tomorrow, and so when you see that, you're going to want to know what's the volume look like. And there's pretty good volume behind that move. So if it looks like follow through, then you can adjust that from a short position to a long position because it's likely ready to continue to run for a while with a breakout like that if it gets the follow through day. That's the key. So when we look at the DMI, you can see it's trying to set up as well. It's not there yet. But if that DMI sets up and then triggers, which again is the ADX breaking above the negative directional indicator, above 20, there's great separation between the two directional indicators already. This one could even relabel to a 3, but it could really run from here. So that would be a really good adjustment that you should look for tomorrow to see, if there's follow through through that. And then let's see, 2 weeks ago we did Texas Roadhouse, and this was another strangle. I'm talking about whether or not the market was going to correct. So good time to start adding in some strangles. We sprinkle those in as the market tends to get a little more uncertain. And there's your downside breakout there. Pretty nice breakout, and came back up, tried to test a little bit higher, and struggling at this point right there at that area of support. And I don't think it's, it could hold and go back, but I don't think there's much holding it there. If it drops back below that 89 level with follow through, that could make a big move to the downside. But nonetheless, nice breakout of the triangle already. And then the last one was paychecks, which we've already reviewed. And so that's it. That's all we have that are still considered to be, quote, open from all of the weeks and months that we've done these TradeFinder events. So let's go ahead and look tonight. Now, I already gave you a brief rundown of this software program, and if you are interested in this program and you become an alert subscriber, the folks at Hub, I guess because I use it, a lot of our subscribers began using it, and they created all of these tabs here under Elliott Wave options. They created all those under what are known as pre-computed searches. Now I mentioned you can program your own search and run it, and you can create scenarios with account sizes, amount per trade, all kinds of things you can do. But then you have to let the scan run out. When it's pre-computed, the results are already calculated for you, and all you have to do is just come over here and hit the button, boom, and the results come up for you. You don't have to wait for the search to run, so it saves some time. And all these ones that say EWO on those are mine. Those are my actual scans that they've put in there. So all of our subscribers can see the exact criteria that I'm looking at on a day-to-day basis to see if we can find any candidates. And isn't it interesting? Here we have SLF, Sun Life. So what I did was I clicked on the bullish impulse, and SLF is one that has already been on the list, and we already have an alert on this. We have a profitable alert for our subscribers right now on SLF. And so it made a nice move today. You can see the DMI is still supportive, so we're going to give it a chance to see if it can move a little higher. The oscillator is still moving to the upside, measuring momentum. And so ADX nearing 40, not quite there, but still good separation between the two directional indicators and separation between the ADX and the positive. Still going the right way. We're going to give this one a little more time and see if it wants to continue to move. And the fact that it's on the search again would lead you to believe that, yeah, there's likely more upside to go in this position. So we wouldn't want to do this one because our alert subscribers already have this one. And as I said, it's already profitable. So let's go back and look, because I'm sure you saw on the list, Mr. Softy, people ask about this all the time. I wouldn't be surprised if this wasn't asked about in the Q&A here in a few minutes. Because people have been asking, this used to be a stock that we talked about all the time, years ago, back in the day, as they say, or whatever. And then it kind of just got quiet for the longest time, but now it's back in vogue again, and people are asking about Microsoft again. And so it showed up on the list. It's got an extended wave 5, but I'm sure you can see this before I even draw it, this big, huge zigzag pattern right here. So that would be a 61.8% extension because that B corrective level there is right at the 38.2% fib level. That means that we're trading at what, 310. So looks like Microsoft wants to try to make a run at 320. And say we like roughly a 10% move. Well, that's where the issue comes in here, right? Because that's not a 10% move on the stock. So is that one something you'd want to put your at-risk capital at, right? Because every time you put on an alert, that capital's at risk. That's just how trading works. And you want to put as many percentages in your favor as you can, knowing that nothing's 100% and we're going to have losses. Not all trades work. But let's start out with, making the best decision we can on the entry and then see how it plays out. But it looks great. It looks like it wants to go there. It's just the fact that it's not a very big move. A $10 move doesn't mean you can't generate a gain on it, but it's not it's $10, not 10%. And so that comes into the thought process. Now, the other side of the argument would be, well, we're being a little cautious right now anyway, aren't we? So maybe we wouldn't want to hang around. And we've kind of been doing that. We've been trading a lot of energy. If you saw that last week, we've been in and out of a lot of energy stocks due to the fact that energy has been moving and not hanging around a very long time. Been a lot of trades, less than a week long, in and out. Just take the gains when they're there and move on as you trade with more caution when we're at such extended levels than you would if you were earlier in a move back to the upside. So you could make an argument that, well, if we're being a little more cautious and we're taking quicker profits anyway, take a $10 move out of Microsoft to be happy with a 20-25% gain or whatever that would generate and move on. That's a really good argument there. It's definitely a great looking chart and pattern. And so you look at the volume today and it had solid volume, although it's doji-ish on there. Let's take a look at the moving averages, and it really wasn't that far away from the 10-day moving average. So kind of following along there. So perhaps it's getting a little bit tired as it approaches that 61.8% level. It did go through some consolidation, tried to make a more definitive breakout move today, but you can see it didn't really hold it. It did finish to the upside. So I'm spending a lot of time talking about this one, and perhaps we should just look for something else. But it is interesting, to say the least. And then, holy cow, look at this momentum scan here. Now, this is something that created just for lower dollar stocks, kind of trading into that whole, the Reddit, Wall Street bets, all that stuff got all these new generation of traders interested in lower dollar stocks. And the risk is so much higher. And just the mantra of find stocks with a high short interest and try to stick it to the man and make the shorts cover. And what they don't realize is retail traders don't have enough momentum. They don't have enough power to cause institutions to cover short positions. What was happening in some of those like GameStop and AMC and those is the institutions got in there with them and helped create the short covering. But if you don't have that, the system doesn't work the same. So we wanted to try to create something that had a little more technical bias behind it rather than just heavy short interest. And so that's where this momentum search came from. And if you take a look at the list, you can see that there's a fair amount of financials here. So there's energy too, oil. So it's pretty much financials. And yeah, look at all the. So I would say when you see something like this, rather than picking an individual one, because there's so many in the same sector, why don't we just look at the sectors themselves? In other words, let's look at the XLE and the XLF. Instead of trying to pick one individual stock, you can hedge a bit by picking the entire sector. And if one stock doesn't perform well, it doesn't take the whole sector down. So here's the XLE. We do have a strangle on this. We did that as protection. So we had downside protection because we had long positions and UNG, natural gas, oil, etc. So if it moves to the upside, you can still make a gain in a strangle with a stock moving to the upside. And you might have said, well, why didn't you just trade that one long? Well, again, it's portfolio protection. We already had long positions. So let's throw something in there in case there's a big turnaround in energy. And we have a position that happened back in March of 2020, where all our directional long positions, like everybody else's, got hurt when the market corrected in March of 2020 when the COVID stuff came out. But we also had a lot of strangles in the volatility portfolio. Each one of those has long puts. All those puts made a ton of money when the market went to the downside. So it mitigated the loss considerably. We still had a little blip down in the equity curve, but nothing like a lot of people experienced during that. So the volatility strategy helps us as a protection against the directional stuff. So that's a long explanation on why we have strangle on the XLE rather than just calls. So that one looks pretty good. If we look at the DMI, maybe getting a touch extended here. The ADX hasn't quite reached 40 yet. During that little consolidation period there, though, we did have a tick down in the positive directional indicator, but it's moving back. The negative is still moving down. It does look like the run is getting just a little tired. Doesn't mean it's over with yet, but a little tired. So let's see if the XLF maybe looks a little bit better. Yeah, so look at this. The financials, are just getting going now with the fact that they've had some higher rates for a period of time, and higher rates are great for the financials. It's not good for tech stocks, but it's good for financials. Remember that we've talked about this so many times, that they borrow on the short end, lend on the long end. The spread in between is how they make money. So when rates go up, the spread widens, they're able to generate more gains. And look at that. So this actually just triggered probably today with that ADX breaking above 20. That's the signal you want between the two directional indicators, separation between the two. It isn't a wave 5, but it's 139%. So it's already extended. It looks like that wants to continue. That could be a zigzag right there. Let's see if that gives us a potential target there. Actually, there would have been two of them, because that would have been a complex A wave, right? Can you see that zigzag that's within the A wave too? So this is really one of the things we talk about a lot as well. A good chart to finish up this part on is the fact that when you hit the 100% extension, again, that's what the zigzag pattern is supposed to do. 50% correction, that's 100% extension on the C wave. Then you look to see, okay, that pattern completed. Does it have an extended C level? Does it continue? And you look at the DMI as our supporting indicator to see if that is indeed going to be the case. And here you'd have to say, yeah, the DMI looks supportive of a move to the 161.8% level. That's exactly how the whole process works. So really great example here. I think we're going to call that one as our case study consideration for tonight. So 1026, we're going to do the XLF rather than trying to pick one of those individual momentum stocks. Looks really good. And so that's it. That's our case study consideration for this week. With that, I believe we have Zach with us on support. We've got a few minutes left. I'll go ahead and take a few Q&As. Zach, if you're there and wouldn't mind relaying some of the questions, that'd be great.
Absolutely. So we'll start out with this first one from Jane. We'd like to look at Apple. This first one from Jane.
Apple. Okay. And Apple is trying to create a little bit wider trading range than it once had. We talked about this a while back with Apple, where it just was kind of ping-ponging back and forth between 145 and 150. Then it broke down, and you can see the new level was 140, which made a little bit of sense going all the way back here into early July. So right there is the 140 level, and still finding resistance at 150. So that part hasn't changed. It's just the trading range seems to be a little bit wider. Now that wave 4 is pretty interesting, right? It's a 50% correction. So that's a good solid number, but the ADX is not going in the right direction, at least not yet. Separation between the two directional indicators, they were coming back together, they're moving back apart. That's why you have to let the indicator actually trigger So we're kind of in no man's land with Apple right now. We're at an area of resistance. We don't have great confirmation with the DMI that we're going to break that. Perhaps if we do, and the ADX can curl back up and we get further separation between the two directional indicators, I mean, that could happen within a couple days that all those things line up, but it's not there yet. And so you have to think that there's still a chance that perhaps that 150 holds its resistance and we head back down. But, this is normally a pretty good time of the year for Apple as well, the holiday season. It'll play out here. I don't think in the not too distant future, just in the next few days, we'll know if it breaks that 150 level or holds it. If it does, and the DMI sets up, well, then you've got a pretty good chance that you're going to run up and hit that new wave 5 high target. But it's got to get through this resistance at 150 yet. And like I said, the DMI doesn't look too supportive of it, at least right now. All right, next.
All right. Next, James would like to look at Duke.
Another energy stock. Duke Energy. Pretty good wave 4 there. The DMI is, it's trying to trigger there. You can see it just broke above 20 today. It did break below 20. I like that when you're creating like a wave 4 or a corrective pullback or whatever within a pattern. I like if the ADX can make it below 20 before it curls back up. It's not a big deal. It's just a preference that I have. It seems to get more follow through with the DMI if it actually breaks 20 and comes back up. Good separation between the two directional indicators there. Turning back up. Yeah, it looks like Duke wants to go higher, and it just triggered today with some confirmation. So you would have to say that at least we're going to go up and test this recent wave 3 high. Then we'll see what the DMI and our other indicators look like there. CCI looks okay. Money flow is really good. A lot of our subscribers have started liking. We went through and did one of our indicator mastery classes on the taking money flow as well. As I said, we've done them on every one of our indicators, and we've got a number of subscribers that really like that CMF indicator. So it looks like it's going to test the wave 3 high and then take a new look at it and see what happens from there. Next.
All right. Next would be EIX. Next would be EIX for James.
Edison. Staying in the energy sector. Well, that's that's a pretty good looking chart. I hope you got that move. I hope you were riding that, but you know what I'm going to say if you've watched any of these before is I don't like that. Now it did what it was supposed to, because if you can look before that, you can see there's the triangle. And what happens when you have triangles? You get breakouts, and that would be what Elliott termed a thrust. You get a fairly vertical breakout move. And that's the problem. It's so vertical now, and it's gone about as far as it's supposed to go based on the width of the mouth of the triangle, which means that I would be worried that this one could come back down. It doesn't have to retrace all the way. Now, remember, at some point in time, that breakout will get retraced, but that could be way into the future. We don't know when that's going to occur. However, we can say that right now we are overbought. So there's the top of the move. There's the 10-day moving average. Say with me, no security in any time frame gets very far away from the 10-day moving average. So with that in mind, be cautious there as far as at least the short term. And it could easily come back down. And we talk about this a lot as well. This would make sense. The market doesn't always do things that make sense, but come back down, test that previous high there right around 59 or 60, and that would give the 10-day moving average a chance to catch up, and everything is rosy at that point in time. It may or may not do that, but that's a scenario that would make a lot of sense, and you can clearly see that breakout wave 3. Now here's one where we didn't have a zigzag in the wave 3. We had a triangle, still a corrective pattern and still a breakout move, And man, do I get a lot of questions on YouTube of how can you have a corrective pattern within an impulse? You can. That's what makes a complex wave. There's mono waves and there's complex waves. And I think people, when they look at Elliott Wave, they don't go far enough into it and realize all the pieces of the puzzle that go in there. There's a lot. That's why we have so much Elliott Wave education on our website, because there's so much to it. Anyway, that looks great. I just would be a little cautious here over the near term because it is overbought, but that DMI is like, okay, once we rectify that overbought condition, we're probably going higher from here. Just would be hard for me to jump into that one tomorrow, seeing that 10-day moving average. But, let that overbought condition play out. Maybe it just goes sideways and allows the 10-day to catch up. At that point, then you could have another good entry. Okay.
Next, Harvey asks, has Tesla gone too vertical?
Too far, too fast. We talked about this, I think Thursday night, was it, where one of our subscribers is asking for some leap positions, long-term appreciation, equity protection assets of leaps. So this would be one you would be hard pressed to not do, like a leap put on Tesla. The question, has it gone too vertical? In my opinion, yes. I think you probably knew I was going to say that before you even asked. You can see the DMI, the ADX is now approaching 50. So we are definitely in overbought land. It's had one heck of a run. How they can justify, after that big, huge split that Tesla had, getting back to 1,000 again following the split is pretty mind-boggling. And so, the valuation is insane. We would all have to have 3 Teslas in our garage to justify the valuation. And you can say that doesn't matter. And you're right. That's a fundamental argument. The chart is the chart, and you got to trade the chart. But as far as short term, that's too vertical for me. That's a big move following their earnings report. So I'd be suspect of that coming back down towards at least 1,000. More towards the 920 level, where the 10-day moving average is, possibly filling that gap that exists right there, and then see from there. But it just feels like a leap put. Buy a long-term put it away, literally, pun intended, and see what happens. A year or so down the road with the stock, see where it's trading then as more competition comes in, etc. It just seems like at some point in time, valuation will matter to it, but it hasn't yet.
All right. This next one up will be from Paul. Hello, Rob. I'm a new subscriber as of yesterday. That was exact for A+ support. Talk about today's alert for it. Particularly, I noticed that option call for $10 from today's security price, 190.80. Like a big spread to cover over the 4K.
Some of what you were saying broke up a little bit. We did, for those of you that this was an alert that was sent out. Welcome as a new subscriber, by the way. And this was sent out as a strangle, looking for this one to break either up or down from this point. You can see it had a downward move today. And if I take all this other stuff off, it's got a very low ADX, which means it's likely to make some sort of a directional move soon. So that's one of the criteria. And I take the moving averages off, etc. What we were looking at prior to today's move, but oddly enough, the downward move today made the pricing of the options more equitable. But there's the ascending triangle pattern that we have. And if it breaks to the downside, there is support right down here. So there'd be really nothing to stop it until it came down to that area. And if it does that, it's likely going to come down and fill this gap. So that's an 11-point move. to the downside, from where it was, which would be a nice move and would generate a nice gain if it went to the downside. If it breaks to the upside, you can see there's a wave 5 target all the way up at 104. So you have an equal forecasted move up or down. You had 80 and 100 strikes, and the stock's trading at 90, dead in the middle. This one, they don't always set up like that, but it happened with the downward move today. Just really made it set up really well from a delta standpoint, forecasted move standpoint, etc. So, it looks good on conception. We'll see how it plays out. And that's the type of thing that we go through on Thursday nights too for our alert subscribers. We cover all of our alerts in detail there, but just went ahead and did it tonight for the new subscriber, and plus to give everybody else an idea of what happens on Thursday nights.
All right. And Kirion would like to look at the Bitcoin ETF. So I think it was BITO.
Bitcoin ETF. Okay. And there's just not a lot of data there, so it's hard to say much on this because it's so new. The indicators won't have time to really give you any sort of a realistic signal. Elliott Wave won't. You just see that it started trading, exploded up, come back down. Typical, just like when most new securities go public. That's usually what happens. You get the initial buying, and then there's a lull in buying. Doesn't mean they're selling, because quite often there's lockup periods, et cetera, that work in with IPOs and stuff. But you get the initial wave of buying, then things calm out. It just takes a while to set up a pattern before there's just not much that I can really comment on what this chart means as far as where it's likely to go from here. Just giving you generalizations of what normally happens when a new security comes to market is, if there's interest in it now, the last thing you want, if you're bringing a new security market, is for it to tank right away. That happens sometimes, and that means that the street is really not too excited about what we're putting out there. But I don't think that's the case on Bitcoin. Just think there was the initial buying. We're going to calm it all out, and then at some point in time, probably a few months down the road, we'll have a more discernible pattern that we can look for. But I look forward to that. But it's just too soon now. Okay, we'll take a couple more. We're past the hour mark, and then we'll wrap it up. You're there, Zach?
Sorry, Rob. Thought I was unmuted.
Hey, if you unmute, you can ask a question. That's how it works.
Is that how that works?
That's how it works, yeah.
All right. This next one from Scott. Bitcoin is about 61,000 right now. I think consolidating this level for about a week. 67,000 needs to be broken and to go higher again. Apologies for the replay.
Yeah, we talked about this at the beginning, and I think that is doing a good job of holding 60,000 so far. So you have to take that into account. But at some point, we need to create this wave 4, but it may not be yet. Looking at the DMI, it's in that area where the ADX can stay in that upper range because it didn't go up so vertically. And the Bitcoin in the past has had some really high, some of the highest ADX readings I've ever seen. Look at that, where it was over at 55. And take a look at this. This is the highest one I've ever seen. I've never seen an ADX at 75 before. So, the normal rules where you would look and say, okay, the ADX is at 40, that's an extended level. Not for Bitcoin, it's not. And it's not necessarily one of the indicators like the CCI. The past is really important as far as extreme points, but still you have to pay attention to the fact that the ADX, even though most securities you'd say that's kind of high, not for Bitcoin. So it is consolidating really well at 60. Does it have to break that before it can go higher? Not necessarily. You know, it's a good looking pattern. I really can't add much more from what I said in the beginning.
Absolutely. So let's go ahead and close off this last one of AVGO.
ABGO.
AV. As in
Oh, okay, that makes more sense. Broadcom. Good call. That's a good one to finish on. There's a wave 3 that's breaking. The only thing negative about this is it's a touch vertical on that breakout move, but perhaps that calms out a little bit. But look at that DMI setup. There you go. If you wanted an ideal setup, that would be it. So you've got the megaphone type look here, where you got a pretty vertical cross between the two directional indicators. The ADX is crossed above the negative, is crossed above 20. I would imagine there's some volume here. Yep. And it's not extreme volume. That's what you want. You want good solid volume. You don't want one of those big massive spikes, because then that means there's nobody left to buy. So it's good when you have just good solid volume in there. I hope that it doesn't continue that vertical movement as much, and perhaps we break into something more on the 45-degree angle, which, as you know, is my preference. And so other than that, though, it looks fantastic. Tiny bit overbought at the moment. Maybe give it a day or two and see how that plays out. But yeah, really good looking chart. Thanks for bringing that one up. And thanks, everybody. Those of you streaming all over the different platforms, appreciate you being with us. Appreciate everybody being with us. And I sign off this way every time. Appreciate you spending your time with us. Time is the most valuable thing we all have. And we hope to make the time you spend with us informative and educational. And hope you felt that way. A reminder, if you sign up and take advantage of our special offer within the next 24 hours, and that's at ewotrader.com/web-offer is the web address for that. And we'll get a certificate for a shirt or a hat if you want to take advantage of that. So thanks, everybody. Have a great week. Look forward to talking to you again next week.